There is so much to consider when you are buying or selling real estate, especially in the Bay Area where our timelines move so quickly and the whole process just feels like a whirlwind. Well, today I want to chat about some topics that I feel aren't discussed enough. Things like closing costs, who can cancel and when can they cancel without any sort of ramification? Can your buddy give you some cash to help purchase the house? These are all make it or break it. It's going to be the difference between you actually successfully purchasing or selling your home, and we're starting now. Hey everyone, welcome back to my channel. I'm Erica Monroe. I'm a realtor in the Bay Area and I specialize in Solano County. The first topic I want to chat with you about is closing costs. Who has closing costs? Well, both buyer and seller have closing costs. Most people understand that the seller's closing costs are predominantly the agent's commissions, so both the buyer's agent and the listing agent. You may have some county or city transfer tax fees as well, but a majority of your closing costs are the agent commissions. Now, for buyers, I feel like it's not discussed enough. What are your closing costs? Did you know that you have to have about 2% of the purchase price saved for closing costs? So not only are you saving up for your 3.5% down payment for FHA or 5% payment for conventional, you also have to consider another roughly 2% ready to go in cash for your closing costs. Your closing costs are made up of a variety of different fees, including items that are called prepaid. So things like property taxes, your homeowner's insurance, your first month's mortgage is all built into your closing costs. So the money is going somewhere. You're preemptively paying these items that you would have to pay later in the year. They're just collected up front. There's also escrow fees, there's title insurance for you and the lender, there are lender origination fees and appraisal if you choose to pay that at closing. Really important to consider, you have your down payment plus an additional 2% to cover your closing costs. And keep in mind, every lender has different origination fees, so 2% is a projection. It may be a little higher or lower. Definitely check with your lender. Topic 2 is who can cancel and when can they cancel? Did you know as a seller that you do not have the right to cancel after you accept an offer unless there's a breach of contract? That means the buyer will have had to default on the contract. So let's say, for example, their contingency, their protection period for investigating the house is due today and you don't receive a contingency removal. You are then allowed to provide what's called a notice to perform. That gives the buyer an additional 48 hours, it's 2 business days, to perform that task. If in that time they don't remove their contingency, then you can issue a cancellation. As a buyer, we've discussed that you have contingency periods or protection periods that help to protect your earnest money deposit. Click above if you need a refresher. So are there any loopholes for the buyer to cancel outside of those contingency periods? Well, I wouldn't call it a loophole. It's very clearly stated in the contract. The seller is required to provide the buyer seller disclosures within the first 7 days of getting into contract. And per the contract, the buyer then has 5 days to review those disclosures and potentially cancel within that 5-day period. Now let's say you've already removed your inspection or your investigation of property contingency, and then out comes a seller disclosure, and let's say they disclose something major. There was a death on property, or there was a major insurance claim, something is malfunctioning with the plumbing that you weren't aware of prior. And you, per the contract, have 5 days to review and cancel the contract if you are not satisfied by what's on those disclosures. Keep in mind that it has to be something pretty substantial, or the seller may fight you on the cancellation. They may hold up your earnest deposit in escrow, and that may prevent you from being able to purchase another home quickly. So can your super friendly buddy who's trying to help you purchase a house gift or loan you that couple $1,000s that's tucked away under his mattress? Well, this is a yes and no answer. If you are getting financing, so if you're getting a loan, unfortunately the lender won't recognize a gift from a friend. The lender needs to believe that you're not going to have to pay that money back. So typically a gift is reserved for family members or sometimes potentially an employer. The lender doesn't believe that you're not going to have to pay that money back to your buddy. If you happen to be doing a cash purchase, title and escrow don't really care where the money comes from as long as it comes from a banking institution. So it can't just be physical cash. You can never bring physical cash to the closing table. It always has to go through a financial institution. So you'd have to wire the funds or have a cashier's check. There is a workaround. If you're in no rush and you've got ample time to buy a house, your buddy or friend could write you a check or help you deposit cash into your account, and you could keep it there for a minimum of 60 days. Those will be considered seasoned funds. The lender, when pre-qualifying you or pre-approving you for a loan, is going to ask for 2 months worth of bank statements. If they can consistently see that money in your account for those 2 months, it's considered and assumed to be your money. They're seasoned accounts. They don't need to trace where the funds came from. Just make sure you check with your bank about guidelines in depositing and what the maximums are before they flag the IRS. As a seller, it's really important that you have a preliminary title report run on your property before you get into contract and even before you come to market. A title report is going to check the chain of title. It's going to look for any old liens or loans against your property. I can't tell you how many times I've been in contract as a buyer's agent and there was an old lien or loan discovered on the title. Well, guess what? You cannot close on that property until that lien or loan is released. More often than not, it's an old lien or loan that's already been paid off, but the challenge is tracing down that lender to get them to sign a release form. They really have no incentive. They've already collected their money. Then you have to chase them down and contact them several times typically before they agree to sign the release form. I've had the process of clearing that loan take a couple days up to a couple months. You just never know how responsive the lender's going to be. And keep in mind, as a seller, if you are in contract and you have a delay with clearing the title, the buyer could potentially present you with a notice to perform and then cancel the contract because there's a breach of contract. You've defaulted on your timelines. So again, really important to clear this out of the way prior to coming on the market. It's so important to protect yourself by understanding your rights and responsibilities as both a buyer and seller. Check out the videos above for a refresher on what contingency periods are. Really important for both buyers and sellers to understand so that you can have a successful and smooth escrow.